Welcome to TheoTrade. This is Don Kaufman. Here we are. It's June 22nd, 2016. We are on the eve of the British referendum vote. What we're going to be discussing tonight isn't so much about what the markets did today. Why? Because we've done absolutely nothing. Really, the S&Ps right now with about 12 minutes to go, they're down about 3 points. Okay. What is in play today, though, happens to be, again, risk metrics. That's what we're going to look at here momentarily, is many of our risk metrics. It's ultimately what we use in the markets to gauge risk. And I'm not necessarily speaking specifically of the VIX, which is on the move. Nevertheless, we're going to look at a number of different risk metrics very, very short term. Prior to doing that, though, let me just give you a little bit of the logistical nature of what is going to occur in the next few days of trade. So again, here we are on a Wednesday evening. Markets are just about to wrap up here in just a few minutes. And when I talk about the logistical nature of what's going to go on with the British referendum vote, first and foremost, when do the polls open over there? How is it going to impact you? What you can expect? I'm going to give you guys some Eastern Standard Time. Polls in the UK are going to open at 2 a.m. Eastern Time. They close at 5 p.m. Eastern Time. Okay. Tomorrow, this is June 23rd, so they're going to open at 2 a.m. and we're going to be getting almost immediate information, okay, and feedback about this. There is no official exit polling, though, going on, which means, they're going to update us a little bit as the day progresses about what the referendum is looking like. However, the final result of the vote is not going to be expected until approximately 1 a.m. Eastern Time on Friday the 24th. So really, really late tomorrow. Now, again, I'll update you guys a little bit throughout the course of the day tomorrow. Some of you guys don't necessarily have the capability of tuning in throughout the course of the trading day. So that is where I'm going to explain a little bit about some of the risk. Again, we are hitting a fairly large event. I've seen a number of these events in recent years, and there hasn't been so much pent-up aggression around an event in quite some time. One of the events that comes to mind, though, happens to be none other than the fiscal cliff. The fiscal cliff, it was the most talked about event, and what do they do? The grandstanding begins, and then it ended with the market rallying absolutely huge. Okay, well, we have some very key differences in here, and one of the key differences is this one. There's a lot left to chance. Okay, doesn't matter anymore what polls are saying. The polls, for the most part, are a 50-50 shot right now. Okay, I'm going to just give you that as clean as I can. The polls are a 50-50 shot. I've looked all over the place. Now, the betting sites, if you look at probabilities, the betting sites, well, there was a very detailed article that came out late in today. The betting sites were highly skewed by a number of very substantial bets on one side of it. And I'll take it for what it's worth. The betting sites are only giving about a 26% probability right now of the UK leaving, of the UK leaving the EU. So I just threw it out there. Again, however, I digress a little bit. The betting sites right now might be highly skewed. The market is pricing in fairly extraordinary risk. And this is where the markets come into play. And this is where you kind of want to really tune in. So we got through some of the logistics. Sure, tomorrow, all day, there's going to be information pumped to us about the British referendum vote. It could be a highly volatile day. However, it's Friday you need to start thinking about. Friday is not just about the British referendum vote. It's also the Russell rebalancing. And the Russell rebalancing is going to impact everything you see on your screen, from Apple to Google to Amazon. They're all part of it. Okay? It's going to be the heaviest traded volume day in equities on the year, hands down, coming this Friday. Know that right now. Here we are on Wednesday, and I'm telling you, an extreme day is coming on Friday. In terms of market certainties, there are none, and I'm going to show you why. When I say market certainties, if you're sitting there and thinking to yourself that I have a good directional bias right now or a good feel, I don't. I have an opinion, I'm going to give it to you, but I have zero directional bias, and there is nothing anywhere on the screen that's going to display anything other than how high risk is. And again, I'll start this evening with the VVIX, and the VVIX, it's the volatility of the volatility index. What it really measures is the intensity at which volatility is really moving. It's how risky is risk itself. You got to love that, right? In the last few years, okay, you can count on one hand the number of times we've been in this scenario. Now, this happens to be a 5-year weekly. Here's once, twice. By the way, this is going back into some fairly extreme risk at the end of last year. This huge spike up here, well, that was the fateful day in August there of 2015 where we had a limit down day. Nevertheless, 1, 2, 3, 4, 5 times in the entire last 5 years have we seen risk and pressure this kind of pent up. So it doesn't matter what you might think personally about the British referendum vote, okay? You got to succumb to the idea that there could be a lot more going on behind the scenes that you just don't know about outside of the British referendum vote. Markets often mask risk around large events. They are using, in my estimation, the British exit vote is being used as a catalyst for a number of other risks that persist in both our economy and economies around the world. Hence, the risks explode. Okay, so that's the VVIX. But you're like, I don't even know what a VVIX is. All right, well, let's go to other risk metrics out there. One of them is the SPX, and it's one of the most effective means as deciphering what's going on. Now, here's the SPX, and I'm going to go out to a 3-year daily. Now, there's nothing on this screen right now that says, well, we're going to explode higher or we're going to come down over here. Okay, this is, for the most part, even though the British referendum isn't necessarily, a 50-50 shot, because again, the polls right now are showing about a 50-50 shot, but the betting sites are showing only a 26% probability. I'm telling you, the way the market's pricing this is very, very differently. The market is pricing it right now as, again, one of the riskiest events we've seen in recent history. And that's what I want to really get to tonight. I want to open up the 2-day options here. And yeah, I got positions out there. I want to open up 2-day options and exploit the fact that in the next 2 days, ladies and gentlemen, boys and girls, the volatility has exploded. It's at 47.5 right now, which means that the SPX, okay, in the next 2 days, this is just Thursday and Friday, is expecting almost a 50-point move in either direction. Again, in recent times, we have not seen volatility nearly this high. In addition to it, many of the back months, which is just further out in time, are also highly, highly elevated. I think you have to respect that the 30-day options are displaying $100, okay, of a move, and that is supposed to be a normal move. Every volatility indicator right now is lit. All right, they're all lit up right now, yet without any movement whatsoever to the market. So we are poised for an event. Again, if you want odds on this one or a probability, I'll give it to you right now. In situations like I've been in the past, and I've had 18-year trading career, but I've been around the markets my entire life. But in situations similar in the past, I would say as high as 70% of the time we're in a situation like a vote like this or the fiscal cliff. 70% of the time, 70% of the time, nothing happens. Okay. However, the other 30% of the time, you get a little bit of chaos out there. And I err on the side of caution over here. And I am going to give you, this is more of an opinion of what I think occurs. I think you better watch out on Thursday for the market to rally when some of the initial statistics start to come in. I would watch out to the upside. But ultimately, I think the market uses this for a catalyst to sell off. And part of that isn't just the British referendum. Okay, it's the Russell rebalancing that's going to cause chaos on Friday on top of it, where products like Apple, they're going to have to lighten the load in terms of Apple. And again, the Russell rebalancing is something we can cover tomorrow in a little bit more detail. Look for it. So I am literally saying here in the next 2 days, and this is my expectation, nothing more. I think we go up, all right, to ultimately end up down. And it's the way that risk is pricing in over here, which again is fairly extraordinary. Just to point out, everybody believes that options decay. Options do decay, unless, of course, more risk is coming in. Risk can offset decay. And I don't want to digress all that much, but I'll go over here to what's called Think Back. It's a tool on thinkorswim, and what it can show you is end of day data in here. And in this particular circumstance, I'm going to show you yesterday and what the close looked like yesterday. So just yesterday, the 3-day options had a 25 vol with a $40 expected move. Okay. Today, time value actually came pumping in and added value back into the options because the expected move now is up to 48. The irony of all of this, okay, is that as the week has progressed, okay, not just volatility has gone up, but options haven't decayed. They've actually increased in value. And that's why when I tell you that all the indications of volatility are all lit up, you don't get too often where both calls and puts as time goes on. I mean, we're talking about a 5-day option, and as time has gone on, the options have actually added more and more value. So listen to me. Risk, it's on right now. Okay? You got to keep your wits about you. Volatility is going to be all over the place tomorrow. Do not make any short-sighted emotional decisions. If you're going to take positions intraday, you do it with alligator arms. That means keep your hands and feet inside the vehicle at all times, because this is where people get their heads taken off. And that is from 15 years of experience in the brokerage industry, especially what I call the man-made events. I mean, people, this is the Y2K of the marketplace. This is, a self-inflicted vote that's ultimately causing, a degree of risk out there. I mean, today, a day where the markets are docile, what do we have? We have the volatility up almost another 15%, and that's volatility. The VIX, that thing is 30 days out. With that, TheoTrade, we've got a class coming up. That class is going to be this weekend. Now, I just did a class last weekend. We've got another class coming out this weekend. If you are a member here at TheoTrade, remember, all classes are included. All indicators are included. But for the first time doing a class, it says coming out party, Doc Severson, who over the years he's delivered a number of spectacular classes. I've watched his career over many, many years. Doc is going to be talking about, it's going to be this Saturday, June 25th from 10 a.m. to 1 p.m. Whether you're a member, whether you're not a member, okay? If you're not a member, the class is $97. Okay? It's a 3-hour class on a Saturday, and it includes a multitude of different indicators along with it. But let me take you through it. The link to go to it is theotrade.com/doc spread. What the class is, increasing vertical spread probabilities with technical analysis. So in recent months, I've done a class on in-out spreads. I have done a class about now selling spreads, which is this past Saturday's class. Doc's class is not just going to tie into that. If you've ever used options and spreads, the class is by far, it's a standalone class, okay? However, it's going to improve accuracy, okay, and percentage with a couple of powerful technical concepts. Now, I am not a market technician, and I'm telling you, you need to spend some time, okay, with Doc to understand a few his methodologies in here. But this class is not just designed to what's going up and what's going down. It's going to help improve you being more effective at both risk management, okay, bullish, bearish, non-directional option spreads, and anybody that's traded option spreads has been in those scenarios, whether you're bullish, whether you're bearish, whether you're non-directional over there, okay? And really, again, how to increase not only efficiency of entry and exit, okay, but to get better, again, characteristics of stocks and indices that make the best candidates for trading these types of spreads. Now, Doc is also heavily into fractal price action. He's going to be discussing, again, why outdated technical systems, all right, are no longer working in today's central bank market. He's going to be discussing all of it. In addition, Doc is extremely methodological, his methodology of going through, I think you're going to find it fantastic. He's methodical. He's very, very decisive in getting in there. In addition to the class, there are 2 bonuses for it. So Doc built a 5-part series for us here at TheoTrade. It's literally 3 hours, and it's 30-minute, bite-sized chunks of fractal energy trading, some charting analysis along with that, and Doc's fractal energy indicator for both thinkorswim and TradeStation, depending upon what brokerage firm you've got out there. This is all included for the $97. Again, if you are a member of TheoTrade, okay, this is all part of what we do here at TheoTrade. If you just would like to sign up for the class, that you're not a member, if you just want to sign up for the class, that's fine. It's TheoTrade.com, okay, /Doc spread. You can also email us with any questions, support@TheoTrade.com. We are here to answer those. Again, my name is Don Kaufman. Good to you. Good luck to everybody during this British referendum vote. Again, I think the next 2 days could see some very wild volatility. You know my feelings. Again, sometimes you got to rally up to head back down. Once again, every risk indicator on the screen out there is lit up. Maybe this is that, 30% chance, and that 30% of the time we do see a fairly wild event around one of these, again, votes. Thanks, everybody, for joining us here at TheoTrade.